Welcome everybody. Welcome to the 4 easy steps to know when to sell. It's my pleasure to conduct the presentation today. So just making sure everything's coming through. Welcome everybody. Just looks like it's all coming through now. So 4 easy steps to know when to sell. My name's Russell Markham and I'm the Director of Education for VectorVest Australia. It's my privilege today to conduct the training for you. I know you're going to get a lot out of it. All right, with that said, give me a sec here. I'm just going to transition the slide set over here and we should now be seeing my screen. So just before I get going here, please note I do need to bring up the disclaimer statements here. Please note our license number here, and you can find out more about us per our financial services guide. In addition, please note today we're not giving any personal advice, general advice only. Please speak to your financial advisor for personal advice. Past performance not guarantee of future results. Forecasts and back tests used or discussed in the presentation today is intended as a guide only. And actual results may be affected by known or unknown risks and uncertainties, and therefore may differ materially from the results ultimately achieved. All right, so with that said, let's jump into the first slide here before we get into the one you just saw. So a little bit about VectorVest. We offer stock analysis and portfolio management software. We've been in business for over 30 years. We analyze stocks in Australia, Europe, UK, US, and Canada. We also cover options. Our software is mathematical, it's rules-based. We use a combination of both fundamental and technical analysis for stocks. And we integrate it with a unique market timing system, and we give you the ability so you can run a portfolio management capability, so you can manage your portfolios, and we help our subscribers decide when to buy, what to buy, and when to sell. We give you risk and money management rules. So just in quick summary there, we're not brokers, we're not fund managers. We give you very powerful tools, best in the business, in my humble opinion there, to manage your money. So we've got to get it right for you. Otherwise, of course, you wouldn't be a subscriber. So we've got many, many happy subscribers, thousands of subscribers around the world. All right, let's jump into the next slide here. So the next slide here, here's our founder, Dr. Bart Toledo, and I've had the privilege of speaking to Dr. Bart Toledo in person in North Carolina in America, and he's taught me so much over the years, and this is his technique I'm going to be sharing with you today. So Dr. Toledo refers to it here as 4 steps to protecting profits. Okay, so it's referred to there as 4 steps to protecting profits. So with that said, let's get into it. So how are we going to protect our profits when we buy into a given share? So I'm going to work through them here with you. The beauty of this webcast is it's not a very long webcast because it doesn't need to be overly complicated. This technique I'm going to share with you is very simple, and then we'll spend a bit of time going through a few examples. All right, it is simple, it is powerful. You can easily apply it. It will save you a lot of stress. One of the most difficult things with investing is knowing when to sell. All right, so let's take that away today, that stress. So step number 1, look for price and volatility. So you start seeing price falling away, things start becoming more volatile. So here we are. Here's one of the big utility companies here in Australia. APA is a ticker code, and there is the name, APA Group, Utilities Company. So we see that the share price was tracking along very nicely for quite some time. We saw a bit of volatility there, but it bounced up again. And over here we start seeing, there's a bit of volatility, and price is definitely starting to go against us. So step number 1 is being met here. There is volatility. So the price direction is going against us, and there's volatility setting in. All right. Step number 2, price cuts below the 40-day moving average. So this is a simple moving average. Each day has the same weighting. All right, so just a simple 40-day moving average. We found that works incredibly well over the last 30-odd years. So here we are using VectorVest. We've just put in a simple 40-day moving average on the share price, and there it is. It cuts through around about here. You know, at least I've done it a day or 2 in, because you see over here, for example, there were 1 or 2 days where it cut and it bounced back up. So it was sort of bouncing in and out, which is not a good sign, but the general trend was good. Now the trend starts going against us and it starts falling heavily below the 40-day moving average. This is definitely a warning sign. Step number 3, relative timing. This is a VectorVest proprietary indicator. I'll cover what that means now. It's on a scale of 0 to 2. Relative timing falls below 1. So it's on a scale of 0 to 2. What is it? So it's an indicator of short-term price trend. It looks at the direction, magnitude, and dynamics of price history, which are used to determine relative timing. So I'm going to put it on a graph here. Here we are, relative timing. So above 1 tells us the stock has got good momentum. So over here, apart from 1 or 2 days there, you can see relative timing is well above 1, and you're seeing good momentum in the stock. And then you see this happening. You see it bouncing there, bounce below, there, bounce below, but now it's really sort of falling quite a bit below. Definitely by here, you've got a lot of warning here to tell us, the momentum is now negative. So it's falling away. The momentum's now to the downside. So at this point here, you really want to be careful. So you can see how it all stacks up. Step 1, you're getting price and volatility, price falling away, it starts becoming volatile. Step 2, price through the 40-day moving average. Step 3, relative timing goes below 1. Now, at this point, that might be sufficient for you to say, okay, I'm either going to tighten up my stop losses or I'm going to move to cash. 3 strikes and you're out type thing. So at that point, you're well informed. You could potentially look to move the sidelines. But our final step, rec equals sell. So this is a rating. Every single day in VectorVest, we rate our shares either buy, hold, or sell. All right. So you'll see here, rec equals sell, then lit up on the 7th of September. So we had all 4 rules now showing up. So price and volatility through the 40-day moving average, RT breaks below 1, and rec equals sell. It all lined up at that point there. All 4 took place. Now at that point, when it takes place, as our founder, Dr. Bartolito, notes, why are you still holding on to that stock? All right, you've got 4 of those steps, all 4 of those steps telling you to be careful. All right, so at that point there, you've then been informed, and if you want to hang on to it, well, you hang on to it at your own risk, at your own peril. All right, so you want to really be careful at that point. And as you see here, the price went from, what was it, about $10.50, it's dropped to $9.56, and it looks like it could fall a bit yet. Time will tell. Certainly we would have no confidence that this would be coming up anytime soon if all 4 of those steps continue to remain in place. All right, so just to give you an idea what the buy, hold, or sell criteria entails. Buy, our price goes above the stop price. It's a 13-week moving average adjusted for the fundamentals. Our shares must have a good combination of fundamentals and technicals and must be moving up in price. So relative timing, the one we looked at, must be moving up above 1. All right, so the price must be diverging away from the stop. So I'm not expecting you to go through all these rule sets here. It's just to give you an appreciation. Sell, price falls through the stop, and a hold. One of these is not being met on the buy. It can't be this one, of course, because it would be a sell rating. So you can see there's a lot of work that goes in behind the scenes. All you need to do when identifying is just simply to put on the rec. There we are on VectorVest. If it lights up with a sell, you're seeing the price going through the 40-day moving average. Volatility and relative timing going below 1 tells you there to be careful. There we are. There are the rule sets on when to sell. Let's work through a few examples. All right. Before we do so, a few of you might be looking at this to say, well, it's all very well. That's when I get out, but when would I look to get back in? Don't forget, on the YouTube channel, go and have a look at the past recordings that we've put on there. We'll give you plenty of examples on when to buy and what to buy. But let's just do a quick recap. When would you look to get back in? So you sold out of APA Group. When would you look to get back in? Smooth left to right price pattern taking place. You'd want rising earnings. You'd want your price to be above that 40-day moving average. You want your relative timing to be above 1. And you want that rec to be a buy or at least a hold. You certainly wouldn't want it to be sell. So where would you stack up on this one right now? Well, we've seen all four rules are taking place. We're seeing the price falling away terribly. There's something else I wanted to point out too. As noted here, I'd also want to make sure that I've got some rising earnings. And over here, our earnings are sort of lumpy. They're not really rising at the moment. A little bit of a tick up here, but certainly not in a solid uptrend. So this is a 12-month leading forecast on earnings. And we've seen over the years that when you get a good set of rising earnings consistently, it drives, it's a good indication, very strong correlation there. Rising earnings, rising share prices, it's as simple as that. So you want to make sure that when you're looking to get back in, that your company's got a solid set of rising earnings. Now looking at it as it stacks up here, the earnings are not rising, all right? They are lumpy, and we have all four of these rules taking place. You've got rec equals sell, you've got the volatility in the price, you've got the 40-day moving average being breached, and you've also got your relative timing below 1. All right, so all of that's taking place. In addition, you've got a set of earnings that are not rising. Okay, so did it meet it? To answer the question, simply put, no. So what would meet the criteria? So let's revise it again. Let's have a look, review it, smooth it left to right, rising earnings, 40-day moving average, price must be above, relative timing must be above 1, and we must get a buy rating. All right, here we go. New Hope Corp. All right, the energy company here, NHC is the ticker code. Let's have a look. Beautiful set of rising earnings. All right, technicals are nicely above 1. It goes to say I don't need to put in the 40-day moving average. You can see straight away that's going to be well above the 40-day moving average. Okay, there we are. And your volatility in your price, well, you're not getting much volatility, and it's certainly not falling away in terms of the price. All right, so let's just hop into VectorVest quickly to do that. Let's bring up the graph. Let's type it in, nhc.ax, enter, and there's our 40-day moving average. So if I put it on here, look at that, well above the 40-day moving average. Relative timing, all right, relative timing, well above 1. All right, put on the rec here, buy rated, and as you saw before, those earnings are stellar. Brilliant set of earnings. So that's when you would look to buy. All right. So now this webcast, of course, this presentation today is all about when to sell. So just to show you, that's what you're looking for when to buy. All right. So let's work through some additional graphs. Here I've got about 10 odd graphs to demonstrate further the 4 steps in action. So let's do it. ANZ. All right, so looking at this, if you're holding on to ANZ at that time, you're seeing this. You're seeing, this is back in May this year of 2022. You're seeing price, massive volatility here. All right, so you're seeing a lot of volatility. All right, you're seeing relative timing going below 1, and you see rec equals sell popping up. All right, so at that point there, that's where you need to be careful. All right, so rec equals sell. And that's where you want to potentially look to jump out. There's the 4 steps in all its glory. Look at the price at that point. The price was about $25, and it fell all the way down to low of 21, and it's slowly recovering back up to 23. All right, so you've saved yourself about 8 to 10% there on the rec equals sell. Relative timing going below 1. Relative time going below 1, 40-day moving average being breached. All right, let's jump into the next one here. Right, next one here, Wesfarmers. So here we go. Price and volatility to the downside through the 40-day moving average. RT goes below 1. Rec equals sell. At that point there, that's when you look to jump out. It lit up, it told you right over there. Where was the price? The price was about, what, $52, and it's fallen all the way down to 44. Now let's just jump back into VectorVest and look at Wesfarmers. Let's bring up West just to show you, because you then look to jump out, but when would you look to get back in? All right, so there it was. Rec equals sell popped up. It popped up here. This is where we were looking on the example. So you can see at that point there, that's what we'd seen. So when do we look to get back in? We want to see the price coming up nice and smooth again. We want to see RT going above 1, and we want to see the earnings firing up. Well, the earnings are holding up very well, so no issue there, but let's scroll it forward a bit. There we are, it starts to pick up. Here we go, price starts picking up. Technicals start picking up, and then at that point, that's when earnings also continue to power on. So very good. At that point there, that's where you could have looked to have got back in again. So up it went, had a nice little rally, and then you want to look out for the warning signals again. Here you start to see it playing in again, volatility and price. Relative timing goes below 1, but the rec equal sell hasn't lit up yet. All right, so you're seeing a bit of volatility creeping back in. Let's close out of here. Let's bring in the next example here to show you. All right, so next example here to show you. Let's bring this one in here. Woolworths. All right, so you can see Woolworths has had a really good run in recent months and years. Done pretty nicely for itself. But then the volatility started to creep in. Sorry, what I'm doing here is I'm just putting in some additional batteries into my mouse. My mouse seems to have become very slow, so excuse me for a second here, just while I adjust the batteries. Hopefully it'll fire up again. But you can see here, this was a classic example of how relative timing started to break down. The 40-day moving average started to break down. That's better. There we are. It's working better. And you start to see it all coming into play. All right, so there we are. Technicals. Here that you notice how the technicals were falling away consistently. All right. That leads, of course, well, as the share price falls, it's being represented by the technicals falling away. 40-day moving average breached. So around about here, you're getting plenty of signals to be careful. And then rec equals sell. Often joke about it as being the kiss of death. When rec equals sell pops up, you really want to be careful. And there definitely would have been the point to look to jump out and start protecting yourself. It's starting to fight back, time will tell, but certainly 3 of the signals were given around about here: volatility and price through the 40-day moving average, and then here's your RT going below 1. So you could have jumped out around about the 36 mark, all right, or certainly tightened up your stop losses. All right, let's keep having a look. All right, Transurban here. So price and volatility over here through the 40-day moving average, and relative timing just sort of broke below 1 around about here. All right, so there would have been a warning signal to be careful, but certainly at this point here, rec equals sell on the 16th of September, that tells you to be careful. All right, so around about $13 odd, $13.20, it's now $12.54 and falling. Let's keep moving on a bit more here. Here's Goodman Group. And again, you know, lots of volatility here through the 40-day moving average, RT below 1, rec equals sell, and it popped up here at 18, just shy of $18, and it's now down to $16 odd. All right, Aristocrat, it's had a very good run over the years, and now it's sort of coming off in recent months over here. And let's look what happens here. Classic example of price going against you in volatility. Relative timing breaks below 1 along with the 40-day moving average, and rec equals sell on the 25th of January. It popped up. Look at that. Price there of $40 odd, $40.45. It's now at $34.93, but it went all the way down to around about $30 odd there. So a very good call there by VectorVest. Just on that, let's jump into VectorVest and have a quick look at Aristocrat. So the 4 steps has protected you very, very well at getting out. When would you look to get back in? All right, so there we are. It all popped up here and it fell away. Where was the low point? The low point was around about $31. All right, so we protect you all the way here. When then do you look to get back in? Well, what we want now is we want price to start coming up smooth left to right. We want relative timing to be above 1, and we want earnings to be rising. Has that turning point just started? So we'll keep an eye on this. Relative timing starting to pick up above 1, earnings starting to pick up, and the price now through the 40-day moving average and starting to smooth up to the upside. So perhaps the turning point has just started. Time will tell. We'll keep an eye on that. All right, next one here. We've got South, actually, South 32. There we are. That's the one I want to show you, South 32. And you can see over here, look at that. Volatility, lots of volatility here. Through the 40-day moving average, RT breaks below 1 and rec equals sell lights up all at once. So it was very sudden. All of a sudden, bang, all of them lit up pretty much at the same time. That's often a precursor to being, to be careful when it all lights up very quickly. And you can see the price there, $4.49, and it dropped below $3.50. All right. Another great example here, Newcrest Mining. Price and volatility through the 40-day moving average. RT breaks below 1, rec equals sell. And the price there was about $23 odd, all the way down to 17. So VectorVest there saved you a lot of money. All right, moving on to the next one here. James Hardy. All right, you start to see the volatility creeping in here. It starts bouncing around. Then it drops through the 40-day moving average in RT, and rec equals sell pretty much lights up all at once. An early warning, be careful when that happens quickly like that. See how the technicals literally fell off a cliff overnight, along with the 40-day moving average breached and the rec equals sell popped up. Look at that, at $49.47. It's currently trading at $32. VectorVest saved you a lot of frustration. It went there to a low of below $30 odd. All right. Next one here, we've looked at APA, so that one there, classic example, and it's still in play. And so those are all the major ones I wanted to show you there. Just on the next slide here, if you like what you see, check us out, www.vectorvest.com.au, or email us, russellmarkham@vectorvest.com. You can take out a trial per our website. So what I'll do here is I'll just load up our website here, vectorvest.com.au, and up the top right here, you can click there to take out a risk-free trial, www.vectorvest.com.au. Trial it out for 30 days. It's $9.95 USD, call it 13 Australian dollars. You can trial us out for 30 days. Just while I'm on the page here, I want to click on this link here called blog. And on the blog link here, what I want to do here is I want to type in for a search, and I want to type in 4 steps. So if you do that, you go to vectorvest.com.au and then click on our blog and then type in 4 steps. You'll see here I've written plenty of great articles on the 4 steps. Thomas Cook, this was in the UK, on the London Exchange before they went bankrupt. It was lighting up the 4 steps left, right and center. This was a classic example where the 4 steps lit up and this company went into liquidation a couple of months later. Let's see, 4 steps protecting profits, when to sell Apple and AMP in Australia, Apple in the US, AMP. 4 steps protecting profits, AMP, Domino's, Pizza and Bellamy's. Again, and here's another one on the 4 steps protecting profits. All right, so plenty of articles on there, and I've even put videos on here as well on how it's all done. All right, so if you get stuck, you need a refresher in addition to what we've done today, vectorvest.com.au, and you can then click on the blog, type in 4 steps, and you can read up about it a few times over should you wish, should you choose. All right, so there it is. How powerful is that? Just before I go here, let's just see, it might not pop up on the YouTube channel, but let's just see, has anyone got a stock that they wanted me to take a look at? And just to save time here, what I'm going to do, I did get an email earlier in the week, and this will actually be a good one to share with you. Hopefully, if you wanted to see this one, you might have seen this one in the Fin Review. This was a company that is in a bit of trouble at the moment. The auditors are refusing to sign off on their 30 June financial statements, and the market's now sort of concerned about what it could be. And the Fin Review was saying that no news is probably not good news. So let's have a look. If I put in the 4 steps, all right, so I'll put in the VectorVest simple, actually VectorVest layout, and I'll put on my rec. Let's see, here we are, the 4 steps. So you can see definitely at that point there, it lit up. and it lit up there again, and it lit up there again. Here's your REC equals sell, and you can see all these rules being met. Let's zoom in over here. So at that point there, a lot of volatility, directions going against you, REC equals sell, RT below 1, price through the 40-day moving average. So in the order that I taught you, the step 1 is price and volatility. Step 2, price through the 40-day moving average, yes. Step 3, relative timing below 1. And step 4, REC equals sell. There it is. So at that point there, what was the price? Let's have a look at the price. Just open it up a bit more here. $4.20 you would have got out at $4.20. And look at that, now down to 63 cents. Now, ask yourself this question, would you have got back in? Remember the rules to getting back in? I want a smooth left to right price pattern, and I want a rising set of earnings. All right, let's change the style here, just to make it jump out a bit more. Well, never saw the earnings pick up, and I never saw the price coming back up. So there you go, the 4 steps kept you out of that stock at around about $4.20. You never would have got back in. That's the power of VectorVest right there, folks. Hope you got a lot out of it. Let me leave the contact slides here. And don't forget, same time, same place next week. We will cover our next great hot topics of interest. Don't forget to check us out on our YouTube channel. Like our videos. We'll put the recording on there as well, so you'll get the recording to it as well. And follow and subscribe to us. Thanks again. Bye for now.